Good day and welcome to Cartrade Tech Limited Q1 FY2024 earnings conference call. This conference call may contain forward-looking statements of the company which are based on the beliefs, opinions and expectations of the company as on the date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vinay Sanghi, Chairman and Managing Director, Cartrade Tech Limited. Thank you, and over to you, sir.
Thank you. Good afternoon, everybody, and I want to welcome you to this quarterly earnings call. And thank you for taking the time out to spend this next 1 hour with us. Just wanted to give you key highlights of the quarter to start with. We had also circulated and uploaded a presentation. The first part was really the key metrics of the company. We have now 200 plus physical locations. In the last quarter, we auctioned at a rate of almost 1 million vehicles a year. Monthly unique visitors compared to last year continue to grow at 34 million unique visitors. The organic traffic continued to be strong at 85%, which is really the strength of the brand and the company. Revenues were approximately 107 crores, 106.9 crores. Adjusted EBITDA touched 31 crores. PAT was 13.5 crores. And the continue to have, free cash flows as well as a strong cash balance, approximately 1,100 crores. Just to give you context, revenue grew by about 18%, adjusted EBITDA by 74%, and PAT was almost 3 times, which is at 307%. If you look at the consolidated, we can take up the consolidated financials first. As I already said, revenues were 107 crores, so 106.9 crores, which is approximately 18% higher than last year. If you see the total expenses are almost 5% up from last year, which is the reason why the adjusted EBITDA is up by 74%, which shows a leverage in the business. Adjusted EBITDA percentage from 20% last year is around 29%. If we take out the other income, it's about still higher at 12%. As you see here, PBT has grown by 316% and PAT by 307%. So on a consolidated basis, we're glad to inform you the profitability has grown, the robustness in the model has been shown, costs have remained about 5%, which is mostly flat. Some breakup, our standalone business now is 56%, and the remarketing revenue is about 44%. So I think that's a bit of a change. And that's been reflected, in the standalone accounts, which is the next slide. As you can see here, standalone revenue has gone up by 28%. Standalone adjusted EBITDA, that's the operating revenues up by 28%. The total revenues up by 48% on a standalone company. Which at 60 crores. The adjusted EBITDA is up to 20 crores from 8.6 crores last year, which is 141% increase in adjusted EBITDA. EBITDA margin is a 34% standalone against 21% last year. If we take out the other income, it's the adjusted EBITDA margin is doubled from last year. 4% has gone to 8%. And as you can see, the standalone profit is almost 6.3 times in PAT, which is at 12.34%, and PBT is about 7.7 times, 14 crores. So all in all, the standalone financials have been strong for the company, led by 28% growth in operating revenue. And I just want to highlight a couple of things here. One is the expenses includes a one-time, due diligence cost pertaining to the, Sobek auto acquisition, and that's included in our other expenses. That's number one. Some other key highlights here are in the standalone. Is that new revenue, not much has changed in the split of used revenue and new revenue. Still used about 17%, new is about 83%. The OEM dealer composition also is pretty consistent and stable. OEM is about 62%. Dealer contribution to this business is about 38%. So this is really the standalone accounts. Where we have faced some challenges, which continues to be over the last 2-3 quarters, is the remarketing side of the business. where revenue over last year has grown by 7%, although EBITDA is up by 11%. And that's partly because of cost reduction of 11%, which has improved the profitability, the unit economics, but revenue still continues to be a challenge there. And I think this is coming from what we've talked about in the previous quarters is a decline in the repossession business. Our repossession business, which from banks and NBFCs, supply coming from all the various banks and NBFCs is down, and it's now 45% of our business. Our fastest growing segment is our retail side of supply to the other remarketing business, which now become 40% of our business. So the previous quarter, the remarketing was 55% of our business, come down to 45. Our retail was 33, has become 40. So we're seeing a segmentation change, and we're hoping that the repossession also picks up in the next few quarters. But at this point, the repossession business is down, and that's actually dragging some of the revenues down. All the profitability is marginally got better. So this is the remarketing side of the business. If you go to the traffic on the consumer side, on Carvale, Bikewale, and other platforms, the traffic is actually up from last year, which was at 31.1 million, it's gone to 34.2 million the same period, so which has grown. The auction volumes are down, consistent with the revenues being down by 8%. So it's down to, in this quarter to an average of to approximately 272,000 vehicles. 250,000 vehicles this quarter versus last year's 270, which is down by 8%. On the Google trend, the brand, we continue to have clear leadership over the competitors. Both Carvale and Bikewale are, several times or a couple of times in terms of Google, brand indexes on the digital brand index. And as you know, 85% of our traffic comes organically, which means traffic we don't pay for. So this is a few key highlights of the financials and key metrics for the quarter. It's been a strong performance at a consolidated level and a standalone basis. The remarketing business has faced some headwinds, which we are hoping we will correct in the next few quarters. During the quarter, we also worked on the acquisition of Sobek Auto, which is also when we signed an SPA to acquire Sobek Auto on 10th of July. We had disclosed this earlier, that we've acquired Sobek Auto, which not only runs the entire OLX classified business, but also their B2B transaction business. So we acquired two businesses from them, both in Sobek Auto, and we acquired 100% of Sobek Auto and its businesses. As I said, the OLX classified business is something which all of us use for selling a car or a two-wheeler or electronics or any other item. There are multiple buyers on the platform. They have almost 100 million downloads on the classified side, more than 100 million downloads, and that leads to a large amount of monthly organic traffic, very consistent with our philosophy of working with strong brands and acquiring strong brands. It's a very strong organic brand as well. It also has a C2B transaction side of the business, which we acquired, which is helping consumers sell vehicles to dealers in an auction mechanism. Even though it has very, very small inventory, it generally does not take a position on vehicles, which is typical to our approach on auctions. So these are two businesses acquired there. Of course, the transaction, we've signed a share purchase agreement to acquire 100% of this company on 10th of July. We're likely to close this transaction, in the coming few days. Obviously at the time of, once we close, we'll give out a lot more data and details around this transaction itself. But we're very excited about it. It's an acquisition for approximately 537 crores, and extremely excited about the acquisition itself. We feel it'll add a lot to the Cartrade tech portfolio of companies, which are, Carvale, Bikewale, Shriram Automall, etc., etc. This is what I had. I'm happy to take up any questions and clarifications which you might have.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Siddhartha Bera from Nomura. Please go ahead.
Yes, thanks for the opportunity. And, sir, I had a question first on this Sobek Auto acquisition. I mean, would it be now possible to sort of share what will be the mix between the classified and the C2B business in terms of revenues? And any update if you can share on the profitability side as well, maybe for last year, whatever you can share here. Basically, just to understand more about, I mean, we have generally followed a very asset-light approach to businesses, and Sobek Auto seems slightly more on the sort of asset-heavy side with so any color if you can share on the current mix and how profitability, how should we think about over the medium to longer term to play out in this business?
Sure. Thanks for the question. As I said, because we've signed an SPA, we've not closed. I'm not able to disclose at this point, the financial data of the businesses. But what I do want to say is that, the various principles of Cartrade Tech around running strong consumer brands, running strong consumer businesses, delivering value to its customers, having good unit economics in their business, is something which will apply to all our companies, not just Sobek Auto. So I think what we are pretty sure of or confident of is that, Sobek Auto with its classified business or the transaction business will deliver value, and we'll have, we will obviously want to create strong unit economics in these businesses. And also, maintain our stance on keeping our businesses as asset-light as possible. I think that's something we've been clear that we're building marketplaces which are going to have good unit economics and be asset-light in nature.
Got it. Okay, so we'll wait for more clarification on this acquisition. And on the current businesses now, sir, repossession has been subdued for now quite a few quarters. I think from next quarter we might start facing some favorable base impacts as well, because now it's been like close to a year when we have started seeing a weak set of numbers. So when do you expect some of these recovery in terms of volumes to play out? Will it happen in the second half of this year, or do you think it may take longer now depending on your visibility at the ground level?
Honestly, there are two parts of this question. The first is the repossessed side. It's hard for us to tell when that would recover. And there will be some base effect. But the bigger factor is that, the economy seems to be doing well, and financing vehicles seem to have better, repayments on the loans and clearly lower NPAs. And that's one of the reasons why it seems the repossession business is lower. And it's hard to predict when this turn on the tide will change. But what we're doing, and I think where we are feeling more confident about, is we're building other segments of supply by force, right? And I think that process has started, some time ago. And as you see here, even though the repossessions fall in an alarming rate, other segments have taken up and filled up these volumes, which is what we are confident about doing, is building our own retail business there so that the vehicles we bring in are, more than compensating for the repossessed vehicles. And if the repossessed supply was to get better, then of course we'll be in a much, much better position as well. So I think our focus is really not just waiting for the repossessed business to come back, but really is about growing other segments of our business, which is actually partly one of the reasons why, this business has still been stable, even though there's been a high fall in repossessed business.
Got it. So lastly, what will be the cost you have incurred for this due diligence, which you have said it has come in other expenses?
Yeah, sure. Anisha, you want to just give the number?
Right now, it's approximately
Sorry, Anisha, we couldn't hear you.
It is approximately 1 crore, Vinay.
It's approximately 1 crore.
Yeah.
1 crore.
Of provisions. Yeah.
Okay, got it, sir. I'll come back in the queue. Thanks a lot.
Thank you. The next question is from the line of Ankit Kanodia from Smart Sync Services. Please go ahead.
Thank you for taking my question, and congratulations on good set of numbers. Thanks. So my first question is related to the acquisition only. So if you look at the competitive landscape in the used car asset-heavy business, so one of our competitors recently shut shop. Then OLX is also right now selling, they have sold to us. So what is our thinking or rationale behind making this kind of an acquisition? Of course, one thing which is clear is that probably the valuation at which we have got is very good. But from a business perspective, looking at the competitors, it looks like it's a very, very, very difficult space to be in. So what is our rationale and strategy to take it up from this acquisition now?
Sure. So we've acquired two businesses. I think the first business we acquired is the OLX classified platform, where consumers like me and you are selling millions of vehicles, cars, two-wheelers, etc. It is actually and then other items, electronics, to various other things. It also has a significant job platform and a significant real estate platform. So I think what we've acquired, the first is the entire OLX classified platform. And as you know, the brand of users or the number of users on the platform is extremely high. It gives us strength on having a large amount of organic traffic in addition to Carvale and Bikewale and the platforms we have. Like Carvale and Bikewale, a lot of that traffic is again organic, as we say, which is not paid for, which makes its unit economics and its business economics extremely attractive to us. And this has been built on great customer experience that they've delivered. So I think that's the first reason which we see, the strength in the brand and the number of users they have. And that's the business we acquired, which is completely asset light and not asset heavy, as you know. The second business we acquired is a C2B transaction business, where they sell or auction vehicles of consumers like you and me who want to sell their car to dealers. And there, they tend to auction it out. It's a very, very minimal inventory with almost in an asset-light manner. Where they're different from some of the other competitors is they tend to be more asset-light, number one. And they tend to have a very large base of synergy or a large synergy from their classified business, because many of the customers who sell the vehicles come from the core classified business. So that's where they're different. We see a lot of synergies in both the classified side as well as the C2B transaction side, naturally. And that's what we believe. We also believe that because of all the traffic we get on OLX or Carvale, we have a differentiated advantage in the C2B business, right, which they run, the transaction business. So that's where we are at. I think we also believe that it will take us some time to. It's a significant, it will be a significant event for the company, and it will take us some time to integrate, various things like technology, brand, people, etc., which is what we are in the process of working through once we close the transaction.
Thank you so much. That was really detailed. So just a follow-up on this. So is it fair to assume that given the kind of unit economics all these asset-heavy used car businesses have been, the transaction business which you are talking about, when we integrate the books, I'm not asking you for a exact number, but is it fair to say that, again, right now car trade is profitable, but once we integrate this business, probably we'll again see a rise in our consolidated numbers?
I can't comment on financials at this stage, until we close the transaction. I think a lot of this will give out at the point of when we, post we closing the transaction.
Fair enough. So one last question. So when you are talking about the classified business, I'm just clarifying my doubts. You own the whole classified platform. So, like, even if I want to trade on electronics, even that will be now under car trade, right?
That is correct. The entire classified platform in India is what we've signed a contract to acquire. That is correct.
Great. Thank you so much. I'll come back in the queue time.
Sure. Thank you.
Thank you. The next question is from the line of Vijay Jain from Citi. Please go ahead.
Yeah, hi, thanks for the question. Can you hear me? Hi. So, my question is, first off, on the OLX classified side, just staying on that topic for a little bit, when we see the financials, at least of Quebec Auto and OLX for FY22, which is available, Specifically on the classified side, there is two components to that business, right? There's the India business, and then there is stuff that OLX used to do for the global entity. So is it suffice to say that whatever they disclosed in FY22 on the India business is what you are acquiring? And will there be business bifurcation here as well? Because I imagine some of the costs within OLX Classifieds India were also kind of attuned to their global business.
Just to clarify, and we clarified this in the disclosures as well, that we bought Subek Auto, which acquired OLX's India Classified business and already owned the C2B transaction business. So what we are buying is a classified business and the transaction business, not OLX's global business. Just want to clarify that. I don't reflect or communicate on the financials of the previous year of this. As I said, the way those companies were, Subek has actually acquired a business, signed a BTA to acquire a business from OLX India, which is the OLX classified business. So as I said, I can only comment on the financials once we've closed the transaction.
Yes, okay. Well, the second question is on just the standalone business. You mentioned used cars is now 27%, new cars is 73%. From what I recall, last year the used car business was 16% and new was 84%. So relatively speaking, new car business has been somewhat weak. And is that accurate? And the second question related to that is when I see auto OEMs make commentary about their plans for this year and their general plans for this year, it does look like as budget is going up or it's slated to go up. There's been new launches from big OEMs across both two-wheelers as well as four-wheelers. So just your thoughts on that new vehicles business this quarter and as you look forward into FY24.
Just, new car revenue is grown by 29%, used car revenue is grown by 33%. I mean, there's not really much change in the ratio, 83, 17, 84, 60. It's like not much change, to be honest, in the ratios. But I can give you a little bit of the idea of the market. The new car market actually has grown in the first quarter in India. It's also, not only has it grown, I think one of the problems for, not last year, but the year before that, has been that supply has been a problem in the new car industry. That seems to have now gone away, where there is supply and there is demand, and volumes have grown, which is a good position and a good market position to be, which is why you see the growth and robustness and growth as well across in our business as well. So it seems to be in a good position, the new car industry by itself. Volumes are up. Supply is better than it used to be. Demand is also good, which is the best place for a consumer and for a manufacturer and a dealer and companies like ours. It seems to be all okay. The used car market also seems to be growing, and that's why we've grown as well. Generally around in the car industry, things seems to be quite stable, and seem to be in a position where, seeing, even though on last year's higher base, you're seeing growth. So all in all, I would say the new car industry, used car industry is reasonably good place in the first quarter. I don't think there's any reason to us to assume that it'll change in the next quarter either, in terms of the car market, the new car or the used car market. On the two-wheeler side also, volumes have got better, and we've seen reasonable growth on the two-wheeler side as well. So just generally, all in all, even if you see our traffic has gone from 31 million to 34 million across these platforms. So all in all, it just seems to be that the auto industry seems to have a reasonable quarter. Not a really, high growth quarter, but a reasonable quarter. I think that's what it seems like.
Got it. Thanks, sir. My last question on the remarketing business. What has been the growth in the retail segment within the remarketing side in this quarter? If you can give me a broad sense of that.
Sure. Let me just check this. What I can see, I don't exactly have, but I think Manisha, correct me if I'm wrong, but the repossession has been down by like 25% or so. I mean, I'm not sure the exact number, but in that range. And the retail has grown. I don't have that exact number, but that has grown by about 25%. Is that correct, Manisha? You can just check.
The repo has declined by 20%, that you're right.
Yeah.
Retail year-on-year has gone up by about 6%.
Yeah, retail has gone up, yeah.
Okay, got it. Thanks. Thanks, Vinay. Thanks, Felicia. Those were questions.
Thank you. Any participants who wish to ask a question at this time, they may please press star and 1. The next question is on the line of Sachin Dixit from JM Financial. Please go ahead.
Hi, Vinay and Nisha. Congrats on the results.
Hi, Sachin. Thank you, Sachin.
Hi. My quickly a question on basically how is the retail business and remarketing different from OLX's C2B business? Can you explain that, please?
Yes, OLX's retail, OLX's auction business or the CP business is of consumers like you and me who want to sell a car. Shriram Automall's retail business includes people like you who want to sell a car, but also includes, could be commercial vehicles, could be all types of vehicles. I think Shriram Automall is actually product agnostic. It could be cars, it could be commercial vehicles, it could be even some tractors or farm equipment. OLX is only cars, consumer vehicles. I think that may be the question.
And in terms of the structure of the transaction, I guess OLX basically buys the car from the customer and basically they have some sort of bid for this car at the back end from some dealer. But in case of Shriram Automall, you are never buying the car from the customer. You are just getting the transaction done and taking commission once the transaction happens. Is that right?
In Shriram Automall, when you give a vehicle for auction, the vehicle's auction, and the seller pays the buyer directly. That is correct. What you say is absolutely correct. In OLX, when they do an auction, the buyer pays them, they pay the seller. That's the only difference. But they do have a back-to-back auction done against every car they transact. So even though, it's quite similar, Shriram Automall doesn't actually pay the seller and take money from the buyer. That's correct.
Understood. So basically, if my understanding is right, basically Shriram Automall is completely inventory free in OLX, while there is a back-to-back bid, but in case the dealer runs away or something like that happens, there is some risk.
Yeah, that is correct. But that is correct. That is absolutely correct.
Yeah. Okay, great. Coming to basically our AppSure business, right? I think that's a business that we are seeing forwarding completely about. Right? You are now buying a OLX transactions business. There was a transactions foray that you yourself launched by doing AppSure. Any update on what's happening there? How is it going to work along with the OLX business?
AppSure has gone to 99 stores now. It's not well connected. It's not, the business are not connected with OLX C2B transactions because AppSure is the place where people like you and me, can buy a car from, right? Whether online or offline. If they're Carvale or AppSure branded stores. If you were to acquire OLX and close the transaction, it will only help, AppSure outlets. But in any way, the C2B transaction business and AppSure are not that correlated with each other, apart from the fact that all the C2B vehicles which OLX may auction may be available for AppSure dealers to buy, which is even available now. Mm-hmm. But otherwise, there's no real link in that business. An AppSure outlet is really a place where you go and buy a car, right? C2B auctions is where you get onto OLX and say, listen, I want to sell my car. So it's a little different in that sense. I think the C2B auction business is more connected with, in similarity with Shriram Automall than with the Carvale AppSure outlets.
Right. Got it. Just one final question from my side. Basically, on the OLX transaction again, the Sobek Auto transaction, basically, looking at how that business has grown in the past, right? They started quite close to when the market leader in that business started, but they were, I think, third or at some point maybe even the fourth place player. Considering that their lead exists in classifieds business, where they are the market leader in terms of used car classifieds in India, I don't think that's the seamlessness that you talked about, right? That the classifieds business helping them do C2B auctions very well, really played out. How do you think it's going to change? What's different now?
So I don't want to comment on their past at all. And, I think the way we look at it is that we are acquiring a classified business where they have tremendous strength in helping consumers like you and me sell something, right? And also a marketplace where a lot of buyers come to buy those products which are being sold. So we are very excited about the consumer marketplace or the classified marketplace, independent to the C2B business, which also we're excited about because it gets us a certain sort of auction supply and transaction, which which is quite unique by itself. Getting a large number of car single users to sell their cars to in a completely simple manner, with very high technology being used. So one must not also put into account that they've built excellent technology on both the classified side and the transaction side, which of course will be available to us. And that's what excites us. The synergies between the classified businesses and the transaction business of supply coming from there, something we'll talk about once we close. But obviously, the classified business is a very strong platform and has, quite rightly, as you say, leadership in the classified business, whether it is cars, motorcycles, electronics, etc., etc. So we feel good about all of it. I don't want to comment on, what they did in the past or what they exploited in the past or not, but we see an opportunity here.
Sure. Sounds good. Thank you.
Thank you. A reminder to participants, please press star and 1 to ask a question. The next question is from the line of Saurabh Shah from AUM Fund Advisors. Please go ahead.
Hi, sir. For a few questions on the remarketing business. So I just want to understand, so how does it go? So you said that the OEM supply has been good and it's good for all of us. But on the contrary, we are seeing a degrowth in terms of our revenues, first of all. So how do you see that growing in the next 3 years, 3 to 5 years, if you can give a midterm view kind of thing? And how does the profitability in this business go? So now that our costs are, I guess, more or less incurred, so what additional cost would be coming into picture for the business growth and everything?
So I think two things. One is the repo business is down, you're right. The retail business is growing. We see, along with retail, adding other segments. And, we see a very strong, positive, business in the next 3 or 4 years. It's a marketplace. The remarketing business is a marketplace where it enables, businesses and consumers of all types of vehicles to sell their vehicle in an efficient, transparent manner. And it is we auction more than 1 million vehicles a year. So we see a very strong business model for the next 3-4 years. It is possible there is some segmentation change, which is repossession being replaced by retail currently in that business. And when repossession comes back, of course, Shriram Auto Mall will be the place where all these businesses will, come to sell their vehicles. So we see that. I think on the cost side, you've seen one of the reasons the profitability of the unit economics is better is because costs have remained flat, in spite of revenues slightly degrowing, right? And therefore we see that, also, like any marketplace, most of the costs are incurred, and we feel that as revenue grows, a large part of that revenue becomes, comes to profit or EBITDA, right? So we feel very good about the cost structure of the company. I think what we're working on is really growing the retail side of the revenue and other segments of revenue.
Okay. So what I also want to get a sense is how has market share grown over the last, past 3 to 5 years with, car wale, bike wale compared to a Cars 24 and now OLX, autos and everyone coming into picture. And off late, what has been the whole time?
So Car Wale, Bike Wale, of course, not connected with Cars 24. Bike Wale is a bike platform. And correct. Cars 24 and the others are car platforms, so not connected. But even Car Wale is a marketplace. It's an inclusive marketplace where everybody, whether it's people like you and me or whether the dealers in India, come and sell vehicles and buy vehicles. And it's an independent asset-light marketplace. In a way, Cars 24, the way the model works, is an asset-heavy auction business or an asset-heavy dealer, right, which buys vehicles and sells them to dealers or to consumers. They're almost complementary and not competitors. So market share is hard to compare, but because you can't compare market, you're almost complementary to Car Wale, where even today Cars 24 lists vehicles on Car Wale for sale. They're almost customers of Car Wale. They're not competitors. So I think a lot of people feel that some of them are competitors, but as I said, they're quite complementary in nature to what Car Wale does. Just want to clarify that. Yeah.
Okay. And in case if you can just give a sense in terms of earlier, what was the earlier traction in terms of an offline model where there used to be some dealers, distributors who used to buy and sell cars to, consumers, and what has that trend changed from offline to online? What type of conversion do you see in that?
There's no change from online to offline. I think the way the used car market is structured is that it is even now mostly dominated or controlled by fragmented dealers across the country. Many thousands of fragmented dealers. I would still think about 80-90% of it is mostly with small fragmented dealers. I think what's changed in the industry is that with platforms like Carwale and others, the dealers have become more tech savvy, and the mode of acquiring a customer. Earlier, you'd have to walk into one of these outlets and buy a car, find a car. Now you'll come to Carwale and try to figure out which car to buy, and then walk into one of these dealerships. So Carwale has become the destination for, like OLX as, the destination for many of these dealers to find customers who sell cars and buy cars too, right? And that's how they connected with these platforms. The customer mostly still goes physically to the dealership, chooses a car and buys it. But what Carwale and OLX have become is integral to this dealership network of used cars to really getting customers to their outlet. So a large percentage of all used car buyers now would come online first, find their car, do all their work, and then maybe look for a certified car and then physically go into a dealer and buy the car.
Okay.
Thank you. The next question is from the line of Rohit Mehra from SK Securities. Please go ahead.
Yeah, thank you for the opportunity. So in the last call, we mentioned the Carwale signature outlet in addition to or in place of Carwale Absure outlet, and the number discussed was 90 outlets. So how many outlets do you have now, and how do we see this ramping up?
As I said earlier in the call, the total calls are 99, including Carwale Signature and Carwale Absure. We continue to add, outlets on both the Signature side as well as the Absure side. A large percentage are still Carwale Absure side dealers, but we continue to add both. We feel good about the rollout. We also, are quite happy with the customer value proposition and the customer service delivered by these outlets. In terms of our total percentage of business to our total overall revenue, it's still small, but it is growing, and it's actually been one of the big growth drivers for us already in the last year, even though in percentage terms of our total business it's quite small. But we feel very good about the whole Carwale Signature and Absure locations.
Okay, perfect. So secondly, on the car mela organized in Vadodara, so what is the rationale behind this type of event, and will there be other such events will be organized?
We do many such below-the-line activities, which are regularly done across, and I guess we'll continue. They're very small below-the-line marketing activities, actually. So I think there was one in Baroda, but there'll be others as well. So, these are just tactical and below-the-line.
Okay, that's the answer to my question. Thank you.
Thank you.
Thank you. Any participants who wish to ask a question at this time, they may please press star and 1. The next question is from the line of Nihal Kumar. As an individual investor, please go ahead.
Hi, sir. Thank you for the opportunity and congrats for the good set of numbers. My question is, since we are mostly through this acquisition decision of what to acquire, which was long pending, and I assume that it will take 1 to 2 years to integrate the business. Now we will still be left with around 600 crore. And since car trade is already generating positive cash, any shortfall for running this new business can be met by that. So if my understanding is correct, can we expect board to expedite the buyback decision? I mean, the share buyback, it's been long due that investors has actually got something out of it. So what?
It's something we discussed with the board, and, we want to first close this transaction. And at that time, we'll go back to our board and reassess whether that's possible or not, right? And look at whether, where we can grow this company and how we can grow this company. But it's something we'll take back to the board. But I think the first part is just close this transaction.
Okay, because otherwise, again, this additional 600 crores will be lying on our balance sheet. and balance sheet has cash since last 4 or 5 years. So that is something I think the street is not appreciating, having such a high amount of cash on balance sheet and earning 6% around yield is, daunting our return on equity.
I understand. I will take this feedback to the board and, and pick it up and debate this. But I think the first priority is to close this transaction. But yeah, we'll definitely take this feedback.
Okay. Thank you.
Thank you
so much.
Thank you.
Thank you. The next question is from the line of Naitik Mohata from Sequent Investments. Please go ahead.
Thank you for the opportunity, sir. Most of my questions have been answered. Just one question. What was the ESOP cost for us during the quarter, and what do we estimate for the entire year?
Yes, the ESOP cost, I think, for the quarter was broken up. I'll just read it out exactly. It is as you see, it's gone down from the previous year. But for the quarter, it's 4.63 crores, which was 5.3 last year. So it's down by 12% for the quarter. And we estimate it'll be in similar lines to the first quarter, Anisha. Would that be correct?
Yeah.
Hello?
Yes, Manoj.
Okay. Yeah, so that's 4.63 for the first quarter, which is down 12% from the previous year.
Okay, so we are planning something around 16-17 crores for the year.
Yes, I think we estimate it'll be in that range. Yes, that's right.
Oh, okay. Thank you.
Thank you. Next question is from the line of Ankit Kanodia from Smart Sync Services.
Yeah. Thank you for allowing the follow-up. So, in one of the participants' question, you answered that in case of the OLX transaction business, basically you purchase the vehicle from the customer, and then there is a back-to-back arrangement with the dealer who then purchases from you. So, any ballpark number, as in terms of how much days it takes and how many days the inventory lies with us? Anything?
The inventory is just very, very short, and it is auction. So it's in that sense completely there is a buyer on the other side. So it's auction, or seller's vehicle is auction. More for convenience of sellers and buyers, we pay and then pick up the vehicle and give it to a dealer. But the inventory is very insignificant, very small. As I said, I can't give exact data out, but we will at closing, give out some of this data.
So you mean to say that only when you have a clear-cut transaction with a dealer, you then go and pick up the vehicle from the customer, right?
That is correct. The vehicle has to run an auction before that.
Okay. So my next question is, in our Carvale platform, where we have dealers onboarded on our platform, so in our channel check, we got to know from some dealers, I don't know whether it is correct or not, and please correct me if I'm wrong, that they also get free leads. Is it that possible for them, that some dealers get free leads? Like, I understood that it's a paid platform where they pay a fee to you every year, and then they get leads.
New car dealer or a used car dealer?
I'm talking about new car and used car both.
In new cars, you have to be a paid dealer. In used cars, it's possible that very small dealers register as individuals. It is possible that they register as an individual. But if you are a registered dealer, it is paid only.
Okay.
Unless I'm not sure. There may be in very small cities where we've not launched paid, maybe C-class towns, etc. It's possible. It's possible.
Yeah, so I'm talking about a small city only. A small city in...
if it's a very small city, it is possible. It is possible. I'm not exactly sure which city, because there may be some long-tail cities where we've not started paid as yet. It's possible.
Okay. Thank you so much. That really helps.
Thank you. Thank you.
Thank you. Anyone who wishes to ask a question at this time, then please press star and 1. The next question is from the line of Govinda Alagi from Natwarlal & Son Stockbrokers. Please go ahead.
Yeah, thank you so much for the opportunity. My question is about the commission on auction selling of cars. Like, any rough idea about how much % do you all charge on selling those cars? And also, can you also provide us the percentage revenue split between different verticals?
No, I'm not able to provide at this point the vertical split, but roughly, I think the take rate, Anisha, is about 4%. Can you correct me if I'm wrong? Approximately 4%.
Yes.
On auctions of vehicles.
Okay. Okay. So the second one is, can a EV penetration specifically on two-wheelers affect the business of bike-wale vertical, like going forward?
The penetration of EVs is very slow to the total volume in India at this stage. But it actually doesn't affect us either way, whether a vehicle is, an ICE, or an EV. We're quite indifferent to it. Either way, manufacturer, the dealers have to sell the vehicles on platforms like Bikewale or Carwale. So it doesn't really matter whether it's in ICE or EV to us.
Okay. The third one is, so do we expect the same operating leverage on the business, like provided the employee costs and the product development costs, will more or less remain the same or perhaps reduce further going forward?
Yeah, as you've seen last year in the results of the company standalone, as well as remarketing and consolidated, and even this year, for us, increase in revenue is a lot of contribution to our unit economics and profitability. It's just the way it's architectured, asset-light businesses, where our costs are stable, and increase in revenue results in increase in profitability. So we see this. That's just the architecture of our business. Yeah, we see it this way.
Okay. And the last one is relying upon multiple business model like B2B, B2C, C2B. So that could be a stable business like blueprint going forward for exponential growth potential.
Yeah, because the number of customers we have on Carwale or on Shriram Automall, the number of sellers and buyers, we tend to be across segments. Also, we're a very open marketplace. So you can come and sell a car on Carwale. You can come and buy a car from Carwale, new cars, used cars. On Shriram Automall, we cater to retail people selling the vehicles. We cater to big businesses selling vehicles. Yeah, I think one of our goals and aspirations is to build a marketplace for the entire automotive industry. And that's how, we feel that many of the buyers and sellers build a network effects on these platforms, which is why, we see it, being in multiple segments is correlated a little bit to growth, right? That is correct.
Okay. And lastly, I want to know the accuracy rate of your ERP tools.
Sorry, rate of?
ERP tools, you're providing the inspection ERP tools, right?
We provide ERP solutions we provide dealers on our platform can use our management software to run their business. So what did you ask? What was the question?
So I want to know the accuracy rate, how accurate is that the whole inspection go behind in that ERP?
No, so we have, you mean the price tool, the used car price tool, is that what you mean?
Yeah.
I got it. No, of course we believe it's accurate, but it's something which is used by all consumers. So if you're coming on Carwale today and you want to buy a used car, against almost all cars, we'll provide what we think is the right price for that car. It's done by a lot of data science among, figuring out what, prices cars are sold in India or bought in India, and then we come out with these, price tools. So we believe it's quite accurate. I mean, it just depends on what the user wants and, wants to see.
Okay then. Okay, sir. Thank you so much for answering.
Thank you.
Thank you. The next question is from the line of Sachin Dixit from JM Financial. Please go ahead.
Hi. I had one more question regarding the cost items. So if I look at employee cost excluding ESOP expense for this quarter, they have grown only 8% YOY. Similarly, if I look at other expenses and I remove the effect of the diligence cost, they have actually degrown YOY. How should we think of steady state sort of growth in these cost items, right? These grow at 10%, 20%. How should we think of it?
Yeah, normally you think that would be the growth rate, and that's what we think will be the growth rate as well. I think we've also gone through a quarter where Shriram Automall's revenue has been slightly lukewarm, and I think that's part of the reason why cost escalation also has not taken place. But yeah, the nature we see our revenues over the last 3 quarters, 4 quarters, and more or less remain stable. The costs have remained very stable. As I said, these businesses tend to be where costs are stable, and our basic push is to increase revenues always, right?
But fixed costs should still increase at what rate is what I was trying to understand.
I think normally wage inflationary rate. Manpower increases are based on just, mostly on a very conservative basis, because for increasing revenue, not necessarily we have to increase manpower in some of these businesses.
Mm-hmm.
So it tends to be more incremental and increments and inflationary in nature. And some increase, but not if we increase our revenue by 100, doesn't mean we need to increase our cost or manpower by equal number, right? I think it just tends to be naturally, that's the leverage in the business these platforms are showing.
Right. And if we exclude any potential impact of the OLX transaction coming in, how should we, what sort of steady state EBITDA margins would you forecast the businesses to reach?
So if you see the last 4 quarters, if you see last year to this year, it increased. A continuous effort is to increase our EBITDA margin in these businesses, right? So we're still far from, best in class, but the effort is to, as revenues increase over the next few quarters or next few years, to be best in class in EBITDA margins. The numbers right now, if you look at, we are at about, on a consolidated basis, we're about 29% with the income, 12% without, right? But the last quarter, we were at almost 20%, which is March. March the quarter seems to be the highest always, right? Because of the cyclical nature in the business. But yeah, the effort is to, get to best in class, really. Just keep growing it.
And so the reason why I was asking was like your probably peer in China, Auto Home, had like EBITDA margins of 40 to 50%. Is that something that you aspire to reach, or do you have the business potential to reach?
Absolutely aspire to achieve. If you're already at 20% last quarter, in Jan to March, right? I think we definitely want to, in the next, whether it's 1 year, or 2 years, or 3 years, but aspire to get to those kind of margins. We're asset-light in nature, so as revenue goes up, we'll get there. But I think that's more a factor of revenue growth than cost control.
Sounds good. Thank you.
Thank you. Next question is from the line of Raghav Behani from Citi. Please go ahead.
Yeah, hi. I want to ask about the 40 crore inter-corporate loan which was disclosed to the stock exchange today. Can you highlight what this loan is about?
Sure. It's an enabling resolution. We haven't yet actually given the loan. It's an enabling resolution is that when and if we close the OLX transaction, we will give an intercorporate loan, which will to a company called BizLoan, which gives loans to dealers who buy on OLX. So I think that is the intent. It's more intercorporate loan to and BizLoan gives or lends money to many OLX dealers who bid on his platform. So that's the intent here, to grow the OLX transaction business. But this will be done only post-closing of the transaction. It's just an enabling resolution, and since, it is material and to be disclosed to regulation, we've disclosed it today because our board has approved it. But as I said, this transaction the loan will only be given when we close the OLX transaction.
Sure. So this would basically facilitate dealers to make the transactions, and from what's given in the disclosure, it will be, it will be against the receivables for the dealers.
They're securitized by the receivables of the dealers. That is correct.
Yeah. Okay, sure. Okay, thank you.
Thank you. Ladies and gentlemen, due to paucity of time, that would be our last question for today. I now hand the conference back to the management for their closing remarks. Thank you, and over to you.
Thank you, everybody, for joining this call, and look forward to catching up soon. Thank you, everybody. Bye-bye.
Thank you very much. Ladies and gentlemen, on behalf of CarTrade Tech Limited, we conclude this conference. Thank you all for joining us, and you may now disconnect your lines.